Thanks for joining us on Lunch. This is Bloomberg Quint. I'm Harsha Subramanian.
And I'm Ira Dugal. Let's get straight to the headlines. Indian benchmark indices trade with cuts of around 1% on expiry day in keeping with global peers.
Bank credit growth rises to its highest in more than 4 years as stress in the debt market sends borrowers back to the banking system.
And heavyweights like Maruti, Yes Bank, Bharti Airtel and JSW Steel are some of the companies coming out with earnings today.
4 Intelligence Bureau officers are arrested for snooping on CBI Director Alok Verma, who's been sent on extended leave.
All that coming up here on the show, but let's first take a look at the markets. Darshan is here with us for the market check today.
Okay, so as you know, the markets are following what's happening as far as the global meltdown is concerned. The Nifty has recovered from the lows of the day, but still down close to 100 points. So there is negative traction that's happening. What is not doing well is basically some of the indices which are high beta. So you have the real estate index, you have the PSU banking index, you have the metal index, which are down significantly over 2% in trade. The only silver line is that IT has managed to do well, considering how the rupee has slowly and steadily started to appreciate against the dollar. Some of the counters that are in focus, surprisingly, Wipro, despite a weak set of numbers, has managed to inch up. It's up almost 3% in trade. Some of the financiers like Canfin Homes have managed to rebound. Bata is up almost 3%. But overall, the trend seems to be on the negative side. Look at the counters which are down in double digits. MCX India is down 14%, post a 10% rally that we saw in the counter yesterday. Infibeam continues to grind in lower. It's down 10%. And after falling and managing to recover, Jubilant Foodwork has given way today after a very, very average number and not the best commentary that's coming in the conference call. L&T Finance Holding, because of its exposure to ILNFS, which they said in the conference call, is down in trade. And Hexaware and Indiabulls Housing Finance are the other counters that have managed to go down in today's trade. Some of the other counters in focus, there is some of the counters which have gained. SJVN, Johnson Controls and Grah Finance are some of the counters which are bucking the trend today.
All right, Darshan, thanks so much for that. That's the equity markets. Just flagging off some of the factors that are playing out in the money markets as well. Firstly, important to flag off the bank credit growth data that came in yesterday from the Reserve Bank of India. Bank credit is growing at a 4-year high, more than 14% growth. 14.35 is the percentage growth in bank credit that came in for the latest fortnight of October 12th. Bunch of factors playing in there. Of course, there's credit demand that comes in ahead of the festive season. There has been general fairly decent traction, at least in private bank credit growth. And also, as the debt markets have turned volatile, you've seen some of the demand that was being addressed by the debt markets move into the banking markets. You can see the short-term rates on your screen now. While they have come off their peaks that they had hit about a month or so ago, they still remain elevated, which suggests that money or the demand for money would move back to the banking system. There is a downside to that demand moving back to the banking system. That is that banking liquidity continues to be under stress. So apart from everything else, such as the festive season demand, etc., there is that increased demand of credit from the banking system, which is meaning that liquidity remains under pressure and the liquidity deficit remains fairly high.
All right, let's move on now. The recent changes in insurance premiums did manage to dampen the spirit for the two-wheeler makers in the second quarter. What's helped them increase sales were the discounts on offer. Yatin is standing by to take us through the visible trends that are emerging from the quarterly report or numbers reported by the two-wheeler makers. Yatin.
Afternoon, Harsha. And if you look at the two-wheeler players, all 3 large players, Hero MotoCorp, Bajaj Auto and TVS Motors have come out with their quarterly earnings. Now, if you look at the trend, on the margin front, it has been on the downward trajectory is what, was a simple consensus. Now, if you look at Bajaj Auto from a peak of, 20-21%, their margins have slid down to almost 16.8%. Similar is the case with Hero MotoCorp, wherein the margins have seen almost a 200 to 250 basis point decline in the last few quarters. In fact, for Bajaj Auto, the margins are at a multi-quarter low, even, lower than what it reported during the GST disruption period. However, we had TVS Motors, which maintained the momentum of positive, margin growth. Of course, on a year-on-year basis, it was at a similar level, but much better on a sequential basis. This is to do with the fact that the three-wheeler sales for TVS Motors had seen a growth of nearly 57% on the second quarter basis. Of course, if you look at the motorcycle business, most of the two-wheeler players were under pressure. However, if you look at the volume growth trend, it has been slightly tapering off. Remember last year, same period, we had the festive season coming in, so base was higher, and despite that base, we have seen some bit of slowdown coming in for the two-wheeler majors. If you look at Bajaj Auto, Hero MotoCorp have been sliding down in terms of the overall volume growth. What really has been working for the two-wheeler players is the volume. But if you look at the cost front, clearly because of higher steel and aluminum prices, we have seen the cost of goods sold and the cost of raw materials increase for all the players. In fact, if you look at Bajaj Auto, the raw material costs have increased to a level of 68%, which is as a percentage of sales almost 500 basis points higher than last year, same period. And if you look at Hero MotoCorp also, we have seen a 300 basis points increase in the cost of good, and the percentage of sales when it comes to the cost of raw materials. Of course, the silver lining here for TVS Motors and Bajaj Auto is the fact that the three-wheeler sales have been aiding the overall operational performance. TVS Motors three-wheeler sales were up 57% for Bajaj Auto, 32% growth seen there. So this has been the broad trend as far as the Q2 performance is concerned.
Specifically with respect to the festive season, any specific trend that's playing out?
So Harsha, all of these companies, on the analyst conference call said that the festive season for the first few days has been weak. Of course, this is largely to do with the fact that the sales moderation is to do with the confusion amongst buyers. We have the insurance regulations which have changed. You have to pay for upfront insurance premiums, and because of the higher costs as well as confusion amongst buyers, there has been slower festivity growth which has been seen. Of course, more importantly, the two-wheeler players have been pushing extra credit to the dealers. They have been training the dealers, to better the overall sales momentum. But that clearly has not happened in the first few days of the festive season. But companies like Hero MotoCorp and TVS Motors have reiterated that rural markets, normal monsoons, as well as the upcoming festive season should be creating a growth momentum as far as the two-wheeler sales are concerned.
All right, thanks so much for that. Indigo flew into a lot of turbulence in the second quarter, not the least of which was the rising fuel costs in a highly competitive environment. Add to that some neo-engine troubles as well. And it was a perfect storm for the country's largest airline. Somit Sarkar standing by to tell us what the earnings brought and what analysts are saying about it this morning. Somit.
So there's no doubt that it was a weak quarter for Indigo, but what is more of concern is that there is no positive key takeaways even from the conference call of Indigo. Now, if you see the headline numbers for Indigo, the revenue of the company was lower by around 17% to close to 6,185 crore rupees. EBITDA was down by nearly 93%. Margins came at around 2%, while the company reported a net loss for the very first time since listing. Now, the net loss before tax was close to 988 crore rupees. Now, the reason why I'm taking a net loss before tax, because that is the actual loss what the company has incurred. Now, the company recorded a deferred tax credit of nearly 336 crore rupees, because of which that net loss had come down to around 652 crore rupees, but the actual net loss amount is 988 crore rupees. But the factors that led to such a weak quarter, well, they are still the same what it was like in the first quarter of financial year 2019. First is the falling yield prices. Now, if you see yield, which measure the average earning per passenger per kilometer, now that declined for Indigo for the third consecutive quarter. In fact, the company reported its lowest ever yield since listing. Now, this is because of competition that the company's yield has fallen by nearly 10% to 3.21 rupees, and that too in a rising cost scenario. Now, if you see the fuel cost, now that increased for Indigo majorly because of the higher fuel prices. Now, in second quarter, Indigo's fuel cost per seat kilometer was at close to 1.56 rupees, which is the highest that the company has reported in the last 15 quarters. Now, despite their fuel efficient fleet, if you see the quantum of increase for Indigo, now that has been higher. If you see the fuel prices, now they have increased by only 40.5% compared to last year, but Indigo's fuel cost is higher by nearly 43%. So you can see here the quantum of increase for Indigo has been higher than what the fuel price actually has been. Now, third is the weaker rupee. Now, rupee depreciated by nearly 9% compared to last year, which led to a 7 times jump in the foreign exchange loss. Now, some other factors that impacted the financials of Indigo in the second quarter. Now, their other income that was higher by around 53% to close to 329 crore rupees, which also helped them to lower their losses. However, a 35% rise in their other expenses offset some of these positive. Now, this rise in other expense could be because of higher maintenance costs that the company has been incurring, as they had inducted older aircraft during when they were facing this new engine issues. They had inducted this older aircraft, because of which the maintenance cost is now high.
So what does the management have to say about the competitive environment?
So what they're saying, well, they are continued. They have just said that the cost prices are not sufficient enough. The ticket prices are not sufficient enough to cover their cost, and they have not been able to increase the ticket prices. And they are not the one who's leading this competition. Well, it is the peers who have been doing this. The company also mentioned that they had to withdraw the fuel surcharge that they had introduced sometime back in May because of intense competition in the market. A couple of things that also stood out in the conference call was, firstly, the company said company has increased its capacity guidance for financial year 2019, and they have done this because of the more aircraft deliveries coming in from Airbus. Now, this could further impact the industry, which is already seeing excess capacity and lower ticket prices. So this more capacity coming in could impact the industry. Secondly, when the management was asked when they're expecting the ticket prices to improve and whether the company is okay with reporting losses, because they are the ones who have been adding the capacity and because of which the ticket prices have been lower in the industry, to which the management just said that they believe that their long-term strategy is right, and their focus remains on their long-term strategy rather than short-term impact. So that's what came out of the conference call of Indigo.
All right, Sumit, thanks so much for that. Maruti Suzuki will be the first listed car maker to come out with its quarterly numbers this earnings season. While the country's largest car maker doesn't have to worry too much about volumes, higher costs may hurt the bottom line. Yatin Mota is standing by with what to expect. Yatin.
Well, this time Maruti's second quarter volume growth was, on a negative side. So clearly, we had declining volumes and a festive base last year, which has impacted the overall sales momentum. If you look at the revenues, because of high realizations, we could see a growth of nearly 1-2%. Basically, that's a flattish kind of a performance. EBITDA, because of lower volumes as well as higher costs, is seen at close to 3,204 crore. That will be a decline of 13%. And similar, 18-19% growth is expected. It's a decline expected on the profit front, wherein profits are seen at 2,023 crores. As I was mentioning earlier, there has been higher cost and higher discount which has been offered during the second quarter, according to analysts, and because of that, the margins also would be under pressure. 14.4% is the number that the Bloomberg poll is throwing up versus a level of 16.9%. Of course, apart from the earnings, we would be watching out for the management commentary with respect to the rural demand, as well as how is really the festive season shaping up, because the two-wheeler players have been talking about a slow start. Let's see what Maruti has to say about the festive season and the demand trends moving forward.
Interesting that. Thanks, Yatin, for that. Let's move on to bank now. Robust business momentum is expected to reflect in Yes Bank numbers, but the street might be more interested in hearing about the lender's search for a new CEO and the transition plan thereof. Shraddha is here with what's being priced in.
Well, in terms of the key numbers, the bank has already shared select parameters earlier in October. So we know that the loan growth for the quarter was 61%. CASA ratio had come off to 33.8%, and the gross NPA numbers to that 1.35%, moving up slightly from 1.31% that we had seen in the June-ended quarter. The credit cost guidance, the bank has retained that at 50 to 70 basis points for FY19. So in terms of the net profit expectations, that is seen about 28% higher at 1280 crores. Do remember that some of the MTM loss provision deferrals from the previous quarters will continue to keep the overall provisioning number high. Slippages and credit costs, on the other hand, are expected to moderate sequentially. The slippages number from the previous quarter was 560 crores, out of which the management had said that 380 crores is what they're very confident of recovering by the end of the September-ended quarter. But having said that, more importantly, yes, the street will be watching out for the divergence report for the FY18 supervision, that is if the audit has been completed. Exposure to ILNFS, the management had disclosed earlier in a con call some disclosure, but not the quantum. So the quantum and provisioning is what we will be watching out for. Also the capitalization levels, given the kind of growth they have seen. So CET1 is thin at about 9.5% or so. So details on capital preservation, the growth curtailment in the event of a delay of fundraising and their QIP, which was earlier planned, and management transitions are all going to hold key.
All right, Shraddha, thanks so much for that. JSW Steel will be reporting its first quarterly earnings as a Nifty 50 company today. Robust demand and high prices are likely to ensure a strong September quarter for the steel manufacturer. Nikki Mirchandani here to sum up the expectations. Nikki.
Hi, I'm going to start off with the basic numbers. We're expecting a more than 20% jump in the top line performance of the company to a number of around 20,400 odd crore. And in terms of the operational performance, we're looking at a more than 50% rise on year-on-year basis for this company to a number of around 4,600 odd crore. In terms of the margin, this seen expanding at 23% as compared to nearly 18% seen in the corresponding quarter of the previous year. And in terms of the net profitability, it's been we're expecting a more than 100% jump out there to a number of 2,025 odd crore as compared to nearly 800 crore that we've seen in the corresponding quarter. In terms of the volume growth figure, which are the key important parameter, we're looking at a 3.5%, actually a 3.5% jump on year-on-year basis and more than 9% jump on sequential basis to a number of around 4.1 MT. EBITDA per ton, that's expected to rise almost 49% year-on-year basis, but then it's expected to slide by 16% on account of some cost pressures sequentially. In terms of the realization, we're expecting a 19% uptick there to a number of around 42,000 rupees. Volume growth and higher realization are expected to aid the operational performance of the company in this quarter. You have both the prices as well as the strong volume growth, which are expected to aid the realization. Apart from that, we are also expecting a healthy operational performance coming in from the US plate and pipe mill business, which in turn will aid the consolidated performance of JSW Steel. We would see some pressure coming in on the sequential performance due to the seasonal weakness, and besides that, we would also look into the higher iron ore prices and coking coal prices in this quarter. Key issues that we like to keep an eye out will be the steel price hike and the commentary coming in there on the demand front. Besides that, we'll also be keeping an eye out on the cost pressures, something like iron ore prices and coking coal prices.
Interesting that. Let's wait and watch how that plays out. Let's also talk about Bharti Airtel. Price war continuing to hurt Bharti Airtel as the country's largest telecom operator is expected to post the biggest loss since listing. Samit is here with what the analysts are pricing in for Bharti.
So if you see the headline numbers for Bharti Airtel, the revenue is expected to be marginally higher to close to 20,174 crore rupees, while the EBITDA is expected to decline by nearly 3% to close to 6,500 crore rupees. Now margins that are expected to contract to nearly 32.2%, while the company is expected to report a net loss of close to 990 crore rupees for the very first time. Now if you see their ARPU, that is the average revenue per user, the key number for the telecom operator, now that is expected to fall yet again for Bharti Airtel, and in this quarter compared to last quarter it is expected to fall nearly 7% to close to 98 rupees. Now the reason behind this fall in ARPU would be because this quarter will see the full impact of Telenor consolidation, ARPU downtrading, and because of pricing pressure seen in the postpaid segment of Bharti Airtel, and that's the reason why the ARPU is expected to decline in the second quarter of financial year 2019. Now if you see the India margins, now India margins will be impacted because of higher fuel prices, that is the higher diesel prices, now strong network rollout, and because of higher tower rentals post Vodafone Idea exit. On the India business side, the home broadband is expected to remain under pressure, while the DTH is expected to benefit because of the price hikes taken by Bharti Airtel in the first quarter of financial year 2019. Now from the Africa business, analysts are expecting healthy trends to continue on the back of tight cost control initiatives taken by the company. Also, the local currencies in Africa remained stable against the US dollars, which should help the margins to remain stable in the second quarter of financial year 2019 for Bharti Airtel. Lastly, a weaker rupee, now that could result into a higher interest cost and foreign exchange loss for Bharti Airtel in the second quarter. Lastly, key things to watch out for from the Bharti Airtel earnings would be the capex plans for the second half of financial year 2019. How are they going to fund these plans? What are the comfortable leverage ratio for Bharti Airtel? Their outlook on their outlook on ARPU, management commentary on Africa asset listing, the commentary on Jio's aggressive tariff, and their impact on the Jio Giga Fiber would be keen thing to watch out for from Bharti Airtel earnings.
All right, Samit, thanks so much for that. Let's move away from markets. The CBI potboiler gets more interesting with each passing day. 4 people from the Intelligence Bureau were arrested for snooping around CBI Director Alok Verma's residence. Verma, who has been sent on extended leave by the CVC, has of course filed a rather scathing petition in the Supreme Court challenging the move. Quint's Poonam Agarwal joins us with the latest. Poonam, first, what have been the developments since last evening? The story has nowhere close to stabilized.
Well, to begin with, the 4 people from the IB. These guys were apprehended by the police and Delhi Police Security from CBI chiefs of residence this morning. They were not arrested. They were taken into custody by the security forces and then they were later on released according to the Delhi police. What the police are saying that they were taken into custody because of some suspicious movement that happened, but later on it was all resolved. And to begin with, as far as the current situation in the CBI is concerned, since yesterday, as we can see that two top bosses, there are two main players in this case. One is the Special Director Rakesh Asthana and Alok Verma, the CBI Director. Both of them were sent on leave, and after that, 13 CBI officers were transferred the same day. Early morning yesterday, they were transferred, out of which some of them were those officers who were investigating the bribery case of Rakesh Asthana. Of course, this was not taken lightly by Alok Verma, who actually has a 2-year fixed tenure in CBI. He quickly moved to the Supreme Court, and in the petition which he filed in the Supreme Court, he made very serious allegations against the government. He said that this has happened to him, and I just quote a small bit from the petition saying that the present circumstances occurred when certain investigation into high functionaries do not take the direction that may be desirable to the government. So this petition, which was filed yesterday, now it will be heard on Friday. And in addition to that, another development that took place today was a petition was filed by Prashant Bhushan in the Supreme Court today, a separate petition in favor of Alok Verma and questioning the post leave on which he was sent. These are the few developments, and tomorrow again we are going to get many more developments from the Supreme Court. But as of now, another important thing which is going to happen is the new enforcement director will be appointed tomorrow, because the current director is going on, he's retiring tomorrow. So these are the few developments which we can see in both crucial agencies, CBI and Enforcement Directorate. So tomorrow would be a crucial day. Let's see whether which turn the Supreme Court takes, because the current director Nageshwar Rao, against him also we are getting to know that there are several allegations against him. So these are some of the issues which will be taken up by the Supreme Court tomorrow, and tomorrow's hearing would certainly be the major factor which will decide the future course of CBI.
Poonam, thank you so much for that. Let's move on now. A rural survey by JM Financial Services indicates that farm incomes are likely to remain stable in India. According to Suhas Harinarayan, one of the authors of that report, farmers are shifting towards sowing crops where procurement is better to benefit from the higher minimum support prices. In a conversation with us earlier today, he also points out that procurement has increased only in some of the large states.
Farmers are choosing what we call safer crops, basically crops where the procurement is in a better place compared to, other crops where procurement is still a little patchy. So we have seen a higher sowing for rice, especially in the southern states and, in some of the northern states versus some of the other crops, so clearly rice, whether it's sugarcane, wheat. These are considered the safer crops, right? Because procurement tends to be better. That's the second thing. Second reason why we think that the farm income itself this year should be, I would say okay. I won't say great, but I think it should be okay. There's no likely disappointment on that front. It's probably not a bumper year, but I think it's going to be good. Second is, clearly on the non-farm income. I think on the non-farm income, what we've noticed is continued government spending. I think be it state and central, the capex numbers have been in double digits on the rural side. And in fact, they're probably, if I look at last 7-8 years, the first half this year has seen the highest spending towards rural capex in the last 7 to 8 years on a YOY basis. And also as a percentage of the budget estimates for the full year. So that's clearly been helping the non-farm income in most parts of the country. Obviously some states are doing better than the other states, but I think that's been holding up.
You mentioned about the crops, the fact that the incomes would largely be okay, not great, but okay, and therefore not bad too. My question is, if you indeed have seen the trend wherein farmers have moved away from riskier crops to safer crops like paddy and sugarcane, and with the moves that have come in from the government, one on the higher MSP, two, with this whole ethanol movement and arguably leading to better profits for some of the sugar companies or the ethanol manufacturing companies, and thereby the ability to pay back to the farmers better remuneration or timely remuneration. Does all of this play a part as well? And what are therefore the key takeaways, one from the farm income side and two from the resultant or impacted industry side?
I think on the farm income, as I mentioned, the weak spot clearly is that, the fruits and vegetables prices, and what we notice is that the larger farmers generally tend to have a higher part of their, crop area filled with rice and, wheat, and it's also a little bit of an ego thing, if you're a large farmer, you tend to grow, rice and wheat. The smaller farmers are the ones who actually tend to grow the fruits and vegetables, which probably is a weak spot according to us. So I think you're right. I think the prices, the MSP prices, or rather I should say the market prices adjust to the new MSPs very quickly for rice. They do adjust very quickly for wheat as well because the procurement is good and better compared to the other crops. A lot of other crops, MSP, in fact, if you look at the market prices, they are still tending below the MSP prices in the market. So one, you have, as I said, moving to safer crops should help. On procurement, we have seen a fair bit of effort being made in some of the larger states like Uttar Pradesh. If you visit some of the agriculture mandis there, we actually notice, efforts being made to inform the farmer about the procurement process and what he should be doing to ensure his crops are procured and he gets the money on time. So that was clearly a good positive development. However, that's probably restricted to 2 or 3 large states. We haven't seen that the efforts towards the new procurement mechanism all across the country. On sugar, clearly yes, I think it should, our view is that it should, help, diversify income for the, sugar mills, etc. But I think, it's maybe not immediately. You're probably looking at a, 2-3 year phenomenon. So that should clearly help, at this point in time, especially given the excess production in sugar that we've been having for the last few years. I think, India probably has a little bit of a problem of plenty because as you know, India's population growth rate is probably around 1.3–1.5%, but we do have food grain production which is higher than that, and we have fruits and vegetables production growth which is even higher than that. Right, so that's why I'm still keeping it okay rather than a great, harvest because of some of the, excess supply and the resultant, price deflation that we've seen.
Moving on to international news, pipe bombs were sent to several prominent Democrats, including former President Barack Obama and former Secretary of State Hillary Clinton, setting off an intense FBI investigation on Wednesday. Bloomberg's Christine Burke reports.
The FBI has opened a broad investigation into exactly where these packages are coming from, who they're being addressed to. All these packages seem to be similar in appearance. They are being addressed to many prominent critics of the Conservative Party and critics of President Trump himself. And these packages are containing apparent explosive devices. They are coming in a manila envelope, and they are actually all appearing to have the return address of Debbie Wasserman Schultz, who is a Democratic House member. Now, interestingly, her name is spelled wrong on the package. So, I mean, you just take that for what it is, I guess. Trump has already condemned these attacks and condemned violence against critics. And already we're seeing an outcry among Republicans and Democrats, just both saying that this kind of violent action is unacceptable.
Out of time on the show. Thank you so much for joining us today.
Lots more on Bloomberg. Quinn, stay tuned.